Hi everybody, Alex the Plooy here from Expert Forex, and in this video I'm going to take you for a stroll through my trading room and also show you the techniques that I use and the tools that I use to stack the odds in my favor. And that's all that trading is about, is you just want to stack the odds in your favor. You don't want 100% results. If you stack the odds in your favor by 60%, you can literally print money. I'm also going to include 4 free trading courses, and I'll explain those courses as we go through this video. Now, to give you some background, I have personally gone through a trading evolution, and how it started out was I traded manually using technical analysis. Then I discovered the automation, the robot side of trading, and I applied that technical analysis to those processes. And then I went into random trading, the automation of random trading where direction does not matter. So that's the evolution that has gone through. Today, what I'm going to show you is mainly the first part, the manual trading based on technical analysis. Now, although it fits into that box, I still use it at the end box because you need to know which currencies to trade. You need to know the market conditions. You need to know a whole lot of stuff to trade random markets. Sounds a bit ironic, but that is true. You always have to stack the odds in your favor. Remember that phase. Am I stacking the odds in my favor? Am I eliminating the negative? Am I accentuating the positive? Now, for more information on that, the center block, the automation of technical analysis, have a look at this 1-minute video that I do. They call it a short, and I take you through my dungeon where I have a number of computers running, trading hundreds of robots. But today I'm going to be going through my trading charts and the techniques that I use to trade and the information that is important to me and the tools that I use to get that kind of information. And we're mainly going to be covering things like the 30-degree indicator, the currency selector indicator, the RSI charts. That is the basis of all my trading in the last 20 years. The channel charts, also extremely important for the type of trading that I do, and then your multiple moving average charts. And then lastly, we're going to look at relative strength charts. Now, I realized very early in my trading career is that there are 2 types of traders. Traders that are trend traders, and there are traders that are retracement or retractment traders. They trade against the trend, the others trade with the trend. And it's very important to make up your mind very early in your trading career which one you favor. You don't need to be 100% in any camp, but you need to favor one of those, because in the end the sideways market trader points in the right direction and he uses a trend method to exit. And I'll explain a little bit more about that. So that kind of trader does do that. And I'm that kind of trader. I'm a retracement trader rather than a trend trader. Okay, so let's look at the first tool that I use. And here's my MetaTrader analysis platform that I use. And the platform allows you to create lots of profiles and lots of chart templates. So I use a lot of chart templates and a lot of profiles. And just to show you the number of profiles I use, there's a icon that shows you profiles. You click on that, and there you can see all the profiles that I use. And there are literally, there's probably 100 profiles that I use. So the profile I'm on right now is the RSI 1-hour market overview. And I look at 16 currencies. These are my favorite currencies. I've colored them in a way to make them easier to identify. But I'm not going to talk about this one first. We'll come back to this one. But this is the one that opens up first because I want to see which currencies are trending, which ones are trading sideways, and so on. So I get a very quick view of what the market's doing. I can see immediately by looking at this whether the US dollar is strengthening or weakening, and I can immediately see whether the yen is strengthening and weakening. And those are the two tricky currencies. They can drive the market tremendously and cause all kinds of havoc if they are uncoordinated. So let's have a look at the first tool that I use, and that is the 360-degree indicator. So I've got it on full display at the moment. Here's the indicator, and what it does, it analyzes the market from a technical analysis indicator point of view. So you can do it on the RSI, on the MACD, on the ADX, on the Bollinger Bands, on the CCI, on the moving averages, on the stochastics, and then the ATR. Now, I don't use all of them. I'm just displaying this to you. The other beauty of this one is you can set up lots of time frames. So I like using the 15-minute, the 1 hour, 4 hour, and daily time frames, so I can see the RSI, the whole market, all the market readings for the RSI in one go using this particular section. Furthermore, you can program it to warn you about potential trades. So the way you want to do that, you can decide. For instance, here is a potential trade on the pound Oz. The reason why it's a potential trade, all the indicators are overbought. You can see the readings 74, 80, 80. So it's telling me that all the RSI indicators are overbought, which means, because I'm a retracement trader, that there's a good chance that there will be a reversal. Simple as that. And the opposite for the Aussie CAD, there you can see 3 of the indicators are oversold, and therefore I see it as a potential for trading, for buying. If it's oversold, you buy. If it's overbought, you sell. Anyway, the RSI is most probably the one that I use the most. And the beauty of this is you can sort these columns. So if I want to see it from a 4-hour perspective, there are all the oversold currencies, and there are all the overbought currencies. So this is a tool that I use a lot because I can immediately see what's going on in the market and where the opportunities are. I don't use the MACD much, the ADX much, the Bollinger Band much, the CCI much. Use the moving average a lot, and you can see how many potential trades there are there. Stochastic I don't use much, but the ATR I do use quite a lot because I want to see the volatility of the various currencies in it. So that is my number one indicator that I like using, because it gives you, as the name says, a 360-degree view of the market. And you can hide these things. For instance, if you don't want to see the MACD, you just go into the settings and you can say, okay, I don't want to see the MACD, so let's take the MACD out. You can just take it out there, and maybe you don't want to see the Bollinger Band, and you can take that out, and you say, okay. And there they've now been removed. So it's very flexible. You can customize it, very nice. And as I say, I use it. The sorting facility is one that I use a lot. And then these warnings. These warnings can also be automated into alerts. So you can actually go down here somewhere. You can get an alert notifications, you can have email notifications, you can have push notifications, and you can have sound notifications. So this is an all-in-one trade. You don't actually even need to look at the charts if you know how to use this. Okay, so that's number one tool I use, and I do use it to shortlist the currencies that I want to trade. Because I'm a retracement trader, I only want to trade the extreme ones, the ones that are extremely overbought, extremely oversold, and then I need to know the volatility of those currencies so I can decide on the targets that I'm going to use and the stops that I'm going to use. Very easy, nice tool to use. Okay, so that's tool number one, and if you want more information about that, I have a playlist here of 7 videos that explains the 360 degree in a lot more detail, and this is one of the there's actually a lot more courses than 4. You can regard this playlist as a course on how you can get the best out of this tool. The other thing that this tool shows is if you don't want to look at the multi-period, you can get currency strength. So what it does, it compares the strength of each currency, not a currency cross. A cross is the Euro USD. A currency is the euro on its own. It compares it with other currencies that are being traded. So, for instance, here you can see the strength of the currencies. How many pips has the currencies moved in the last 12 hours, the last day, the last week, the last month, and the last 3 months, and the last 6 hours, and the last 3 hours. So we want to see how many pips the currencies are moving. That gives us an idea of what the trends are, which is the most volatile, which one is losing. So there's the losing pip movement, and there are the gaining ones. So the gaining ones gain compared to its trading partners, and the losing ones lose compared to its trading partners. So it tells you immediately the relative strength of these currencies. And again, you can go and play around with the information here. Is absolute gold. And again, it's also from the 360-degree indicator. Okay, so let's move on to the next one, which is the currency selector. Now, I can't overstress the importance of using the correct currency for the strategy that you are using. The currency will also determine the size of the stops, the targets, the trendiness of the currency, and all that. But let's go and have a look at this indicator. Now, the one thing about the currency selector, it finds information that is not visible to the naked eye. There's certain things that you cannot see on the MetaTrader platform, and this currency selector goes and finds them. For instance, the swap charges per currency, the margin per currency, you cannot see that actually with your naked eye. The spread volatility, in other words, how much does the spread actually jump up and down during the day, and that kind of thing. So it's more advanced stuff to give you an idea of the risks involved in using a particular currency. Then one of the things that we look at is the currency trendiness. Now, trendiness is one of the things that traders really don't know much about. So trendiness means that you can have a sideways currency trading at a certain volatility, and you can have another currency trading at exactly the same volatility, but it can be very trendy. It can be trending a lot. So one of the ways we do that is we measure the trendiness of the currencies as factors, and that gives us an idea again about how aggressive we can be with some of our strategies and how conservative we need to be. For instance, at the moment, the USD yen is the trendiest currency. Now, if you look at the charts, it might not appear that way, but is by far the trendiest currency at the moment. New Zealand yen is the least trendy at the moment. In other words, it's trading sideways. So again, this is a way of shortlisting the currencies that you want to trade or want to look at. And so you can use the 360-degree indicator and this indicator together to decide which currencies you're going to trade and in which way you're going to trade them. Bit of advanced stuff, but it also gives you the ATR, which is basically, a lot of traders think that is the ultimate volatility indicator because it measures the width of what the price moves in a particular time zone. So if you're using the daily, it says, oh, the daily, let's have a look at the daily, for instance. The daily ATR for the euro pound is only 24 pips, and then the daily movement on the pound yen is 136 pips on average. So that immediately tells you your stops and targets for the euro pound should be smaller than, and your pound yen stops and targets should be bigger. Now, if you relate that to the Liberty range type of EAs, that means the gap size must also be bigger and or smaller depending on the volatility. But also you need to take trendiness into account. I have made a previous video about 2 weeks ago, so please go and have a look at that, where I explained you can't take only volatility into account. As I explained earlier, it could be sideways or upwards, you need to take the trendiness into account at the same time. USD yen might have low volatility, but it might have very high trendiness. And if you look at these two, for instance, that's very interesting. The USD yen has 80 pip volatility in terms of the ATR. The New Zealand yen, almost the same, 79 pips a day. They've got similar ATRs, but this one is the least trendy, and that one is the most trendy. So the information you gather from this analysis is fantastic. Spread factors, and you can switch them off. So you just switch that off now. So now we're looking at the spread factors, and the spread factors basically tell you exactly how much you're paying. So spread factors give you a lot of information that you don't actually see very easily in the MT4 platform. It tells you what the pip value is per currency, what the spread in pips is, therefore what it will cost you in spread to trade a particular currency. So look at this. The CAD franc, because it doesn't have much liquidity, has a very high dollar spread. So a lot of people don't think in terms of dollars, whereas the yen has a $6 cost associated to the spread. So that's almost a 10 times difference. Again, you can sort this. You can see which is the most expensive currency to trade in terms of spreads, which is the cheapest one. It will vary from broker to broker. So this is only for this particular broker. It will vary, and that is why you need these tools. And then we look at some more advanced analysis where we say, how much money are you getting for every pip movement in the market? So we're saying, what is the ATR relationship to the spread you're paying, and we look at those kind of factors. We also look at weekly volatility factors, and there we are. You can see that the days differ. The days differ there. We also look at weekend gaps. Which are the currencies that make the biggest weekend gaps over the last few weeks? And you can see that the New Zealand hardly makes a gap, but the pound yen makes quite big gaps. So if you're a gap trader, this is critical information. Then we look at swaps and margins. There we go. So we can immediately see what the margin is for every single currency, something that you actually don't know. And there is the margin for each particular currency. You can see the ones with the lowest margin, Aussie in this case, and the highest margins are the pound franc in this particular case. And then we do some other ratios where we look at the ATR per margin cost, and we say that the euro franc is the cheapest margin, in fact, and that the Aussie yen is most probably the most expensive margin in terms of volatility. So again, a bit of advanced decision making information. And then we look at spread volatility. This one I've literally opened it up now, so it hasn't got that much information yet, but here you can see the minimum spread, the maximum spread, and then the average spread of certain currencies. And here you can see the Aussie CAD, minimum 10, maximum 30, and then the average. So it gives you a lot of information that you're actually unaware of as a trader. You don't see these things happening on the charts. That's why we need to make this particular tool to extract that information and sometimes embarrass the brokers, where we can see that there's been spikes or big jumps, or the average isn't what they say it is, and that type of thing. Okay, so very important tool that I use. Have a look at those kind of things. You really do need to take those kind of things into consideration. What we're doing here is we are stacking the odds in our favor. The more you can stack the odds in your favor, the better your results will be, the more more dollars you'll be making. And this is a refinement that people do, that traders generally do not appreciate. Now the good news is there's a course on all of this. I've just briefly covered that, but there's a detailed course on the currency selector. You don't need to own it. Go and do the course just to understand the principles involved. You do need an EA to extract that information, because it most of the information isn't readily available on your MT4 platform. So here's another course that you can do to learn more about currency selection. Okay, and now we're moving on to my favorite trading charts, the RSI charts. You'll see why they're my favorite, and let's go straight into that. Okay, so I've got a whole lot of RSI charts, multi-time frame ones, and this is the template that I use the most. And what I'm going to do is I'm actually going to go to the one that I use a lot, which is the 1 hour RSI overview. I also use the 4 hour one quite a lot, because what I'm looking at is trends, support and resistance, and those kind of elements. So let's just do the 1 hour ones. So these charts, how I sort them out is these are the charts with the USD as the second trading currency. Here's the charts where the USD is the first trading currency. Here are the charts where the yen is the second currency, and then here's a mixture of them. So I basically sort the charts out like that. Let's open one of these and see what it's up to. And then what I do, I have an RSI with a setting of 4. 4 is the magic number because the moving average that you see on the charts is also a 4 moving average offset by 4. So what that does, it creates a perfect barrier between buying and selling. So here is the sell phase, there is the buy phase. Now it's gone into a sell phase, and that is a setting that we developed, that I developed very early in my career, and I found it to work throughout all the time frames, everything like that. So that is a standard thing that I have come up with. So that's what's on my charts. My charts don't normally have this zigzag indicator on it. I've got it on there to see the actual length of trends. So here you can see 200 pip trend, then a 150 pip trend, then a 200 pip trend, then a 130 pip trend, 100 pip, and then a 250 pip trend, and so on. And here's a 2. So I want to get an idea of the volatility of the currency, the length of the trends, because a lot of EAs don't like long trends. A lot of EAs do love long trends. So you've got to match your EA with the type of market. But also the market changes. I mean, here you can see it was a sideways market. Then suddenly things started hotting up. So this is all information that I get from these charts. Now, so let's have a look at some of the signals that I get from trading the RSI, and I'm just going to give you an overview. This is just an overview. I'm just strolling you through my trading, but how I use the RSI, I look for trend line violations. Now here's a type of trend line violation where it's been bouncing. Maybe I could even refine it by doing it like that, and I'm saying there was a trend line violation. So in other words, the RSI went and then violated this. So that's actually a signal. So let's see where that signal happened. Can you see that signal happened before the break? So I must explain there are two types of indicators. There's a leading indicator that gives you a leading signal, and you get lagging indicators that give you lagging signal. Now on the whole, the RSI is a leading indicator, and at worst it's a concurrent indicator. In other words, it tells you when things are happening, but this one tells you before it happens. That's why I use it, and I've made a lot of money from it. So there's a really good signal. Now I'll show you why it's a good signal. It also has what we call a divergence. So the price is going up on the chart. The signal is the RSI is saying, hey mate, what you see on the chart is play, because the movement, the trend is running out of steam. So there was the signal. That purple line was the signal. So what happens is you take a sell based on the divergence, that one, and you can refine it by also looking at a trend line violation on the chart. So you would enter on that trend line violation, or you would trust the RSI, you would trust it and say, no, I'm going to trust the RSI. I'm going to enter early. So there's the early entry. So that's how I use the RSI. I look for divergences, I look for trend line violations, and that type of thing. So here's another trend line violation. Here is another trend line violation. So let's just have a look at them. Let's see, when did that one happen? Okay, so that one happened a bit too soon. Here's another one. Let's see. Let's see when that happened. Okay, so that one happened. It happened actually one candle earlier. That's it. So there was a nice early warning. This was a bit of a false one, but in fact, if you stayed in the trade, you'd be fine. This one over here, let's have a look at that. So these are the kind of signals that I go for, and the reason being they are early. They get you into the trend early. Nice big trend there, nice one there. That one, again, if you look at this, that's most probably the trend line violation there. And we look at when did that happen, and you can again see it's in advance of when the actual breakout happened. So that's basically how the RSI. You can make a fortune just trading this. You will not make a fortune if you don't believe in this. You'll make a fortune if you believe in it, and it takes a bit of time to build up that belief. And again, remember, you're not looking for 100% accuracy. You're looking for 60% accuracy, because look at these trades, you only need a small stop and you've got a big target. You know, small stop, big target, small stop, big target. So you need to train yourself to believe in these kind of techniques. You might be watching this video and you look at that and you say, oh, that looks interesting, I'm going to try it out. You try it out, you find one that doesn't work, and you give up. This is my lifetime work. I found this signal to be the strongest signal ever. Okay, so now you can see why I have this setup on my charts. It's a RSI setup, normally a clean chart here, but I like having the moving average. So the role of the moving average often is the RSI points you in the right direction, like there, it's pointing you in the right direction. The moving average takes you out of the deal. When the price moves over the moving average, you get out. So for instance, here the RSI pointed. So the RSI is my cannon, it points in the same direction. The RSI, the moving average, says, okay, now the cannonball needs to touch the ground or hit its target, and then you get out when the price moves over that moving average. So that's basically my technique. So I have these charts for most of the time frames. I have them for the monthly, the weekly, the daily, the 4 hour, and the hour. Like I'm watching the hour right now. I literally watch this chart every day, open it up, have a look at what the market is doing, and so on. So but if you want to trade, those are the signals to do. Okay, so here I have some information on the trend line violation strategy. Here's videos that show it in action, and go and have a look at that. Clickable links to these playlists will be in the description of the video as well as in the commentary of the video. If you are going to be a manual trader, this is the strategy. If you master this one, you're made. Now notice in the example that I used the pound yen, and as we saw earlier, the pound yen is one of the most volatile currencies. So if you're looking for big trends, don't use low volatility currencies, use big volatility currencies. And here's another course, it is 10 videos long, tells you about the best strategy that you will ever use in your life. Again, I'm talking from my perspective. This is the strategy that I have found that absolutely prints money. You need to convince yourself that it does and create your own variation of it. But here we are. There's another set of videos that you can look at for more information on the RSI trend line strategy. Okay, so the next thing, now channel trading is something that I discovered has a high probability of success. And again, remember, I'm not looking for 100% success. I am looking for 60% success, and that's all you need if you are going to use small stops and big targets. 60% you print money. You'll notice that these techniques are not rocket science, but you need to build personal confidence in them. Once you've got personal confidence, you print money. Once you have doubt in your mind, if you have the slightest bit of doubt, or you overanalyze, then you will battle to trade. When I was trading, I could see a trading signal from across the room. I could walk into the trading room, look at a chart from across the room and say, there is a channel trading signal. There is an RSI trading. I would go in and take it. That's the level you need to get at. You need to get to that level of trust, confidence, and know what you're doing to trust that you're making good decisions. And remember, you're going to be wrong 40% of the time. So don't kill yourself about those 40%. Part of good traders is the ability to say, oh, didn't work out. That's what a pity. What can we learn from that trade? What did I miss? That kind of. And the market is wild. It's a wild, random market. So we're just trying to create some order in this crazy market that we trade. Okay, so let's go and have a look at channel trading. Okay, and to do that, I need to go and find some channels, and let's have a look here. Here's some 4-hour channels. Let's go and have a look at those 4-hour channels. Okay, so okay. Again, I've got my charts set up on a very similar basis. I've got these charts for 1 hour, 4 hour, daily, weekly, all that type of thing. So I do look at it from that point. My favorite time frame for this one is a 4-hour time frame. Let's go and have a look at the pound yen again. It's one of the better currencies to trade. It's just an amazing currency to trade, and the reason being, and you need to look at your currencies very carefully. If the currency is in the same time zone, for instance, the pound euro or the pound franc or something like, they're in the same, basically the euro, they're in the same time zone, they will be less volatile than a currency that's in a different time zone. For instance, the pound yen. The yen is in Asia, the pound is in England, so therefore they're not in the same, and they will have higher volatility. That's just it's just a guideline, and those kind of currencies give you better trading opportunities than the ones that are in the same time zones. For instance, the Aussie, New Zealand, low volatility, and they don't offer the same trading opportunities as, for instance, the pound Oz, because it's different. Again, beautiful. How channel trading works is you only have to find 3 bouncing points to create an expectation that the 4th bouncing point will happen at a certain place. Now I'm going to just illustrate this, for instance, and it's very vague, but let's say that's a bouncing point. That's our number 1. That's a bouncing point number 2. That's a bouncing point. They're not as clean as I like, and don't go for perfection with this one. 80% is good enough. Once we've got 1, 2, 3, we create what I call a expected bouncing point, and don't think of the numbers. You just need 3 bouncing points, and then your expected bouncing point is exactly there where here's the channel line, and it's bounced once, twice. See? So there you could start taking a sell to that point there. Now, why do I like this trading? It's simple. Those are the rules. As simple as that. I've just taught you channel trading. Those are the rules. It is likely, not guaranteed, nothing in Forex is it's likely to bounce on the next channel line, and look at that, it's also likely to go to the next one. So that's how channel trading basically works. That is the rule. Simple as that. Find 3 bouncing points and then project a target there, project a target there. And again, I don't put the target exactly there. I put it a little bit there because I get there's a element of flexibility required in this. And the same thing there, that could be taken as a hit because it's so you don't need to go for 100% that. But you can see hundreds of channels here. For instance, there's a channel going there. 1, 2, 3, 4, 5, 6, and this one's on the way up there to 7. So channel trading, once you get your eye in, you will just see channels all the time. You just see channel, and you trade exactly that. You go, oh, it's bounced there, it's bounced there, it's bounced there. Oh, I'm going to put a sell in to go there. Oh, I'm going to put a buy in to go there. Oh, I'm going to put a sell in to go there, and so on. And they overlap here. You can see here this might be a 4-hour channel, that might be a 1-hour channel, and so on. So you actually get a lot of overlaps. You get channels within channels. So that's how channel trading works, and the odds of success are very high. And why I like them is you use small stops and large targets. Okay, so how do you know when a channel's not working? So a channel stops working when it has a failed swing. So there's a channel like that. So it went down, bounce 1, bounce 2, bounce 3, bounce 4, bounce 5, went up, bounce 6. Then it went down and stopped and then broke out. So what this is called here is a failed swing. In other words, it should have had a swing right down to the bottom, but it failed. Therefore, that is a buy transaction. When it breaks out after a failed swing, breaks out there, that is in fact a buy transaction. Also, it's an indication that a new channel is being formed. Okay, so those are the 2 rules. Expect them to bounce on the channel lines or close to the channel lines, and secondly, watch out for failed swings. That's all channel trading, and I promise you can print money again. And that's why I've got so many charts, because a lot of people are like, oh, I'm going to trade the euro because I like the euro, blah, 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 and they only watch the euro. But you've got to trade as many charts as possible to see which ones are setting up for a failed swing or which ones are setting up for a predicted bounce. And your eyes, when you do this, again, as I say, I walked into a room, I can see these things from a distance. If you looked at all of these charts, you would see trades very quickly. You don't need to spend more than 2 minutes looking at these charts, and you'll say, okay, here's a great trade, I'm going to take it. Here's a great trade, I'm going to take it. That type of thing. It's automatic. Now, this is an indicator that I've got in. I don't like using these kind of indicators, but they do help my eyes see channels a little bit easier. Here's a nice one here. Bounce, 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 almost perfect. So you would make that your target, unless this becomes a failed swing. So if this one goes there and starts coming down, you then take a sell out of there. So you watch out for failed swings all the time. Okay, so that's a bit about channel trading techniques that I use. High probability technique, small stops, large targets. That's why I do it. Simple. I've just taught you how to do it. The RSI, simple. I taught you how to do it. These techniques are not rocket science, but the thing you've got to do is you've got to trade them and trade them and trade them for years, so that you stop having this little devil on your shoulder that said, oh no, it's not going to work. You've got to say, I know it's not going to work 40% of the time, but I'm going to do it because I've made a lot of money using it. You've got to get to that. And if you haven't got a few years, then you back trade. You just back trade and back trade and back trade and back trade until your eyes can see successful channels all the time. Train your mind to be successful. And back trade and back trade until you see RSI signals that are absolutely perfect, and then you trade them. But you can back trade, manually back trade. So manual back trading, you just go back like that and switch those off so that you can go back as far as you want to, and then you say, okay, let me see if I can spot channels, and you say, okay, here's maybe one there, don't need to be 100%, so it's 1, 2, 3, 4, 5, there's a breakout. So so your target would be there, so you would have made that leg, and then because that broke out, you would take the sell, because if it breaks out, and the breakout would most probably that would be the breakout. And it's actually very interesting too, just a little sideline, is when it breaks out, it almost goes the distance of the previous channel. It's another little thing that you'll learn in the course. Speaking about the course, unfortunately I don't have a slide for that one. I will leave a link in the description for the channel course, and also for channel playlists that you can go to learn how to do channel. Okay, let's move on. Okay, this is quite a long video, but I think it's worthwhile covering it all in one go. Then the next one is multiple moving averages. Those are personally discovered charts that I used very early in my career, and I'll show them to you. You must not understand them as trading charts, you must understand them as environmental analysis charts. In other words, all I want to do when I see those charts is the currency trending? Is it trading sideways? Is it consolidating? And that type of thing. I don't want anything more. If it is consolidating extremely, I also want to know that, because that means there's going to be one hang of a trend happening pretty soon. So let's go and have a look at those. In this case, I'm going to have a look at the daily ones. Here are the daily ones. Let's have a look at what they look like. There we go. Okay. So these are basically just 5 moving averages of different periods, different colors. I've blacked out the price movement. The thing you do, you go to properties and you just black everything out, so you only see the moving averages, because that's all I want to see. And I can immediately, let's just go through these charts. This one, earlier I said, when they come together, when they consolidate, when they make what I call a knot, there's a knot, it means there's going to be one hell of a trend. And that is in fact what happened. Again, there was a knot there, big trend, not big trend, not trend, not trend, not trend, and so on. There was a knot, there was a small trend, small trend. So the knots play quite a big role. When the moving averages are flaring, in other words, when they are like there, they're flaring, they are moving away from each other, they're getting that body is getting bigger, it means there's a trend in place. So that is regarded as a trending, that's a trending. So it's not rocket science, it's really easy. But you can see here, this one was trending, consolidated, started trending again, and it might be consolidating again. This one is just a bit of a rubbish currency. It just trades sideways. It doesn't know what it wants to do. So they start developing characters, these currencies. Here you have a trending one, consolidating all the time. Here's a very strong trend. Look at this trend, absolutely fantastic. But it has knotted, and it could result in a trend downwards. There's again, same thing, big trend, started to knot, could result in a trend, and so on. So firstly, I can tell which ones are trending, which ones are consolidating, which ones are knotting, and that's all I want to know from these particular charts. Is the visual impact of them is what matters. These are, if you are a sideways traders, these are dangerous currencies to trade, because they are trending now. And if you're a trending trader, you should have caught them when the knot happened. And there are techniques there. You can just, one of the most, trading isn't that difficult. one of the most basic techniques is just to draw a trend line, and you enter when the price moves over that trend line. Trend line violations on the RSI and on the pricing charts are basic ones. So you know, you could really have made a lot of money just using trend lines. So as you can see, my techniques are very simple. The trend line violation technique is extremely simple, but effective. So that's what I use the moving averages for, just to get a feel of the environment. I can see, let's have a look. The yen is not overly dominant, because these are all the yen. It is causing small trends, but not overly dominant. The USD is very dominant, because it's causing all of these big trends, and it could be because of the risk of war. USD always increases in value because they're going to make a lot of weapons, and therefore the USD starts trending. Then I've got some other ones which I didn't actually mention on the list here. I've got multi-time frame charts. Now I'm just going to take one at random, and on these charts I look at my RSI indicator template on a multi-time frame basis. So here I've got weekly, daily, 4 hour, 1 hour, and 15 minutes. So I want to see what they are doing on a multi-time frame basis. So on a weekly, this one's trending. On a daily, again, you know, once you start seeing channels, you can see them a mile away. So there's a channel. So it's at a dangerous point where it's made a false swing, and if it breaks out there, it's going to go. This one also, you know, you'd immediately draw your channel lines, your support and resistance. I don't really go for horizontal or much. I go for vertical. So there's another one there. Yeah, a bit messy. But there is a little channel there. Look at that, it's bounced a few times. 1, 2, 3, 4, 5 should go down there, and so on. So you do that kind of analysis. You also look at the RSI. You'd say there's a trend line violation that is not working that well. This one you can't, because the RSI is pushing to the top, you can't use it that much. But you can see how tradable these ones were. There's some trend line violations that were very good. There's one trend line violation there, very nice one there. Sometimes you can't find really nice ones, but those were two really obvious ones. Here on the RSI again, there we are. There's the trend line right before it actually happened. Then, oh, this is a nice one. Then that one, there's another trend line right again before it happened, and then here's another trend line violation. So the RSI, between the RSI and the channel trading, you can actually trade quite nicely. And again, sometimes they support each other. Here's a element of support in these ones. You can see that bounce that was identified there was also a channel bounce. That one identified there was also a channel bounce, and that one identified there. So there's an overlap in the techniques. But this is just another element dimension that I look at. I look at the currency from a multi-time frame perspective. Then we look at the relative strength chart. So I'll have to go down a bit. I've got multiple moving average templates. So let's have a look at the relative strength of, let's say, the pound. That's good. All right, so what happens here is I've got all the pound crosses on one profile. So I've got the pound USD, the pound yen, the pound Oz, the pound, the euro pound, the pound New Zealand franc, and the CAD. Okay, so now I can see, relatively speaking, how the pound is trading compared to the USD. You can see here it's completely different to the New Zealand dollar, completely different. And sometimes they're the same, like these two charts. Not really the same. Let's see, those two seem the same, but you can now see how the pound is reacting to the various currencies, and that gives you a relative strength idea of what the pound is doing, which are the currencies that are the best to trade the pound on. You know, like for instance, there was, and at the same time you can say, all right, I'm getting a signal here on the pound Oz. Does that signal exist elsewhere in one of the other currencies? So that's another thing that you do. You might see a signal on one currency, and I would sometimes trade the opposite currency. Or not the opposite. I would sometimes trade another currency because that currency has got a better volatility, has got a better spread, has got a whole lot of other stuff. So I might find a signal here that that is now here's just a plain trend line violation signal. Look at that beautiful trend line violation. It's not even that visible on the RSI. It's not. That's not a great RSI signal, but that's a fantastic trend line violation signal. And there's again, and then that's also confirmed by a trend line down there. That one is confirmed by a trend line over. You see how these techniques support each other. So I find a lot of value in comparing the crosses of a particular currency with each other to see what's going on. I mean, this one again, let me take that. Again, here was an obvious trend line violation trade over there. Although it's not that obvious over here, it's not. Sometimes the RSI doesn't appear to be nice, as it were. The other thing about these trend line violations, if they occur a long way from the 50 line, they have less reliability. That one's on the 50 line, so it's more responsibility. That one on the 50 more, but that one must probably not that great. That one very tricky. This is the 4 hour, so you'd look at this RSI on the 1 hour to see if that's a better signal. Okay, so those are the relative strength charts that I've used, and let's just go back to my favorites, the 1 hour overview. So I might have forgotten to show you this one, which there is a multiple moving average course. So there are a couple of really good videos that have been made on the multiple moving average. You can go and have a look at those ones. Let's see what else there is. There is what I call the lifestyle technique. Now, the lifestyle technique basically says you have the set of charts that I've just shown you, or profiles and templates and things like that. You don't have to spend a lot of time trading. So what you would do is you'd open those charts, you'd look at the RSIs, and you'd say, here's a trade, here's a trade, here's a trade, and you'd either trade them immediately or you trade them using pending orders. So you say, if the price moved over the trend line, I want to get in, and you put a pending order right there, and you already know where your stops should be and your target should be and that type of thing. So trading could be a 20-minute event a day. If you're more serious, you could most probably have 3 20-minute periods of trading. You don't have to spend your life in front of the charts, and that was the whole idea of the lifestyle technique. It says set your charts up this way, look at them very quickly, make up your mind, put in potential trades or actual trades, forget. Just, you've got your stop, you've got your target, you know that they work 60% of the time, you know that your stops are likely to be smaller than your targets, so everything is in place. Just walk away and go and play golf. That's the whole idea of the lifestyle. If you want to go and know a bit more about the lifestyle technique, there are a lot of videos on that. So this is a fairly lengthy video, but I thought I'd make it because that's basically taking you through my manual trading processes, my chart setups, the strategies I use, the courses that you can use to improve your own skills. But the biggest lesson in trading is you don't learn from a book. You don't learn from watching a video. You learn from the market. The market will teach you how it wants to be traded. And therefore, you have to spend as much time in the presence of the market so the market gets to know you and you get to know the market. And you do that by trading over and over again. So in other words, just trade as much as you can. Trade all the signals that you see. Trade. See your average results that you're getting, because once you develop statistics like I have a 60% success rate, my average loss is this so many pips, and my average gain is so many pips. Once you start developing those statistics, you can start refining and finding out, how can I improve my risk to return ratio? How can I improve my success rate? Those kind of things. So it's only from trading and building those statistics that you can start doing those kind of things. I run into so many traders who want to intellectually and theoretically know the market 100%. You cannot. The market will teach you how it wants to be traded. You must spend as much time getting to know the market as possible. And the market is sometimes in a bad mood and then sometimes in a good mood. If it's in a bad mood, don't trade. When you do all these things that I've just shown you, you'll know when it's in a bad mood, when it's just doing crazy stuff. Just don't trade. When it's in a good mood, trade like crazy. Place hundreds of trades, because that is when you'll make money. All right, it's just some of my own experiences that I've had. I hope you get value from them. As always, links to items spoken about in the video will be in the description of the video, as well as in the first commentary of the video. All of those items are, there's a lot of free playlists there, free courses. Please take advantage of them. And the whole idea of this video was to show you how I used to trade on a manual basis, and how that has given me the foundation to develop my expertise in automating some of the techniques. You'll see a lot of these techniques have been automated into robots, and it's also given me the ability to look at what works in the market and what doesn't, and that is where the risk return ratio is one of the most critical things. So from here, Alex Plooy, cheerio.